Everyone thinks the super rich build their fortunes in the stock market. You picture them on Wall Street, or maybe these days with a team of analysts glued to Bloomberg terminals, making millions on a single trade. But what if I told you that for people who've truly built massive wealth, the stock market is one of the last places they put their money? There's a foundational 3-step sequence they follow, a real secret engine that generates their wealth, and they do it all before they even consider buying a single stock. Most people, including me for a long time, follow a script we've been taught our whole lives. Get a good job, save what you can, and put it into a diversified portfolio. For a lot of us here in the UK, that means diligently putting money into something like a Vanguard S&P 500 ETF, which is my go-to. Then you wait 40 years and hope you have enough to retire. But the truly wealthy don't just play this game, they see it for what it is, a tool for wealth preservation, not wealth creation. Financial assets like the S&P 500 are safe, long-term plays that keep you rich, but they don't really make you rich. They flip the script. They don't start by investing their money, they start by investing in the machines that create that money. And today we're breaking down the exact blueprint. The first and most critical investment has nothing to do with finance, it's an investment in your own health. Now this might sound like a cliche, but for top performers, it's a cold hard strategic calculation. They treat their physical and mental well-being as their primary asset because they know health is the platform for high performance. If you think about it in Call of Duty terms, if you pull an all-nighter and your reaction time is short, you're going to lose more gunfights. It's the same in real life. I work as a remote software engineer, and if I'm burnt out or exhausted, my focus is gone, and my ability to solve complex problems drops to zero. You can have the best ideas in the world, but if your mind and body aren't ready to execute, it's all for nothing. This isn't just about eating a salad, it's about understanding a key principle. When you pay attention. People who build wealth often hire personal trainers or join premium gyms, not just for the luxury, but as a commitment device. It's a way of forcing themselves to show up, and as a bonus, these places often double as a high caliber networking opportunities. The person on the treadmill next to you is likely another high performer, leading to connections that can turn into deals. The numbers back this up. The wellness economy is a massive force, projected to surge to $8.5 trillion by 2027. Top companies are in on it too, dedicate a significant portion of an employee's total compensation package to health benefits to attract the best talent. For people at the top of their game, their body and mind are the engine of their wealth. Neglecting your health is like letting your most valuable machine rust. They know this, and it's why, before they ever write a check for a stock, they write one for their health. It's the non-negotiable foundation. Once their health is locked in, they move to the second layer, systemically investing in skills. You can think of human capital as the economic value of your experience and abilities. It's like your character skill tree in an RPG. Throughout your career, you're slowly converting that human capital into a financial capital. The wealthy just figured out that the fastest way to get rich is to dramatically increase the value of their human capital first. While the average person might be content with a small annual raise, top performers are investing in skills that can double or triple their earning potential. As a software engineer, I know this well, but I also feel underutilized in my 9 to 5. That's a huge reason why I started this YouTube channel. It's my way of investing in new skills outside of my day job. I'm learning scripting, editing, building a community. I'm building my own human capital. This isn't about another generic degree, it's about targeted skill acquisition that makes you valuable and eventually irreplaceable. For an entrepreneur, this means investing in their own leadership skills. For a professional, it means mastering high-value skills that are in short supply. The best companies do this too. They actively reskill their workforce because upskilling a current employee is almost always cheaper and more effective than hiring someone new. This focus on human capital is what drives innovation and stops them from losing their best people. Building skills is like adding horsepower to your financial engine. It's leverage. The more valuable you become, the more your time is worth. The smart money isn't just working hard, it's investing in becoming so good that the work produces an outsized return, long before that money ever touches a brokerage account. With a foundation of health and an engine of high-value skills, we get to the core of the strategy: aggressive, systematic reinvestment into the main cash flow machine. For most of the ultra-wealthy, this is their own business. This is the step that creates true financial separation. While the average investor gets excited about a 10% annual return from an index fund, a business owner can generate returns that easily dwarf that. The top quartile private equity funds, for example, have historically outpaced the S&P 500. This is the part of the journey I'm on right now with this this channel. The playbook is surprisingly simple. The top 0.1% often reinvest a huge chunk of their profits, sometimes between 20 to 30% and even up to 70% for high growth companies, directly back into the business. They use this capital to buy speed in a few key areas. First is technology and automation. This is about building systems that create efficiency and cut costs. Second is marketing and customer acquisition. They pour profits into scalable, data-driven campaigns where the return is measurable money multiplier. Third is customer experience and product quality. Happy customers drive revenue. Studies show loyal customers are willing to spend significantly more and become your best salespeople. Finally, there's employee training and development. This links back to the second principle. Reinvesting in your team boosts productivity and cuts the high cost of employee turnover. This creates a powerful growth cycle. The business makes a profit, a large part of that is reinvested to make the business even more profitable, and that generates even bigger profits for the next cycle. The mantra becomes clear: if you need capital for growth, it often makes more sense to sell stocks to fuel the high return engine of your business, not the other way around. So let's put it all together. The average person's financial plan starts at the finish line. They try to build a fortune with the very tools the wealthy use, only to preserve their fortune. The top 0.1% do the exact opposite. They build their wealth machine from the ground up in a specific order. First, they invest in their health, making sure their mind and body can operate at peak performance. That's the foundation. Second, they invest in their skills, relentlessly upgrading their human capital to maximize their value. That's the engine. And the third, they pour money back into their business, which is the vehicle that provides leverage, compounding returns far beyond what public markets can offer. That's the accelerator. Only after this three-part machine is humming do they start moving their excess profits into traditional assets like a Vanguard portfolio. At that point, the goal shifts from wealth creation to wealth preservation. The most powerful part is that this mindset is accessible to anyone. It's not about having millions to start, it's about shifting your perspective. It's the reason I work my 4-day work week as an engineer and then spend my time building this channel. I'm trying to build my own machine. So before you obsess over the next stock, ask yourself, have I truly invested in my health? Have I invested in skills that will multiply my income? Have I started investing in the business or career that will be my primary wealth generator? Master this sequence and you're no longer just playing the game of money, you're playing it like the top 0.1%. If you found this valuable, a subscribe would be amazing. Let me know in the comments which of these 3 investments are you focusing on right now.